Welcome, everybody, today. Thank you so much for tuning in. My name is Patrick Oborn. I am one of the co-founders of Telarus, and I come to you today surrounded by a bevy of smart people. We are here today to talk a little bit about cryptocurrency and blockchain technology. And before we even get into any of the subject matter at hand, we want to start off with a very important disclaimer, and that is this panel is really to teach you the basics of the technology, to teach you the basics of the definitions behind some of the words that may sound kind of like the military, like you start throwing around acronyms, don't know what they mean. We want to make sure that we use this webinar as a chief education tool to the public, to our suppliers, to our partners, even to employees of Telarus, to bring everyone up to speed with cryptocurrency and the blockchain technology that it's based on. This webinar is not intended to be financial advice of any kind. We want everyone to know that the decisions you make are yours alone to make, that you need to do your own due diligence and research. And we would invite you, based on what we teach you today, and hopefully what we do teach you today can form a basis of the research that you're going to go out and investigate. A lot of us have been in this business for a long time. We have been playing with cryptocurrency, studying it, and learning more about it, but more importantly, the blockchain technology that it's based on. And we're going to talk a little bit about what that is and how it does. But just know that there's been very few technological transformations that have been akin to the Industrial Revolution that we've been through in our time. The first one that I can remember is growing up and computers really hitting the scene, where we've actually figured out how to shrink an integrated circuit into a little tiny silicon chip, and that dramatically increased the density and brought online a ton of computing power. The next revolution was software, figuring out what to do with all that computing power, how to bring that to the masses, where you have Windows and everything else. The next evolution of that technology, of course, was the internet, allowing all those computers to now talk to each other, share information, and figure out a way to pool all of the knowledge together. The next one was guys my age that went out, Sergey Brin and Larry Page, that created Google, that allowed us to actually index and use all this information so that the internet went from really a wild west of information to a very tight, centralized repository of information that anybody could go and search and find. The next iteration on that was social networking, where now you can have people that are connecting with different people using the tools and the intelligence that this internet that's interconnected, that can be searchable. Now we can use that to actually form the basis of human interactions. The next evolution to that is, we've already talked about digital transformation, where we're taking all of our customers from really the on-prem hardware-based world into the cloud-based world. The next evolution that we're going to see is taking information and putting it into a blockchain. And we're going to talk about all of the opportunities, all the possibilities that that's going to open up. In talking to Calvin, one of our panelists that you're going to hear from today, you're going to learn that he talks about it as really one of the next phases of the digital transformation. He goes, if we're going to go all in on digital transformation, we're going to go all the way to the blockchain. So we're very excited today. This is a very disruptive, very controversial in some spheres, but it's a topic that we think that you need to know about. And here at Telarus, we are happy to bring that to you today. We are privileged to have an all-star panel today. First, we have Josh Lupresto, the VP of Sales Engineering. He is the person here at Telarus who is no stranger to working with our partners on their biggest, most complicated, most sophisticated deals. He is himself an engineer extraordinaire, but he's also the leader of our entire sales engineering and sales architect team. Josh, welcome to the call today, my friend.
Hey, good morning. Excited to be here. Fun stuff. I'm going to keep the propeller hat off as long as I can.
That's all right. I know it's going to be tough to leave that off. There's going to be a lot of information that Josh is going to share with us today. We're also privileged to have with us Calvin Cooke. He is one of Telarus's fastest growing partners in the cloud. He is the founder and general manager of B Digital Partners. Calvin, welcome to the call today, my friend.
Thanks, Patrick. Great to be here. I'm glad we could take all of our chats back and forth for this last several months and share it with the entire partner community and friends and customers of such.
No, that is fantastic. Thank you for being here. We look forward to hearing your comments, especially. And then lastly, we have Roman Jeitziner. And I think I butchered your name. Jeitziner, because I don't know German that well, and he's from Switzerland originally. He is in San Francisco. He is the director of sales engineering for open systems in the United States. Roman, welcome to the call, my friend.
Thank you very much. And no, you didn't butcher my name at all. Roman Jeitziner is perfect.
Jeitziner, there it is.
Yes, super happy to be on the call. Thanks a lot. And to start, this is actually one of my favorite use cases around crypto. The reason why the four of us are on this panel is not because we knew each other for 10,000 years. It's because crypto connected us, and very stoked to be on this channel. Thanks a lot.
Yeah, thanks for being here, Roman. And like Roman said, this panel really came together because the four of us have really been interacting just offline in our own little Slack room that we put together. And we've compiled a lot of information. Like Roman said, I can't remember whose idea it was, but it was like, wouldn't this be great to kind of share all this information we've pulled together with the channel in general? And that is one thing that we want to do. First, we want to tell you that the amount of content that could be talked about today is enormous and would fit 2 or 3 hour discussion. So what we're going to do is we're going to trim it down to the basics. If you are interested in learning more about the things that we're going to talk to you today, please attend Telarus Partner Summit, July 27th through 30th. We're going to have an entire partner panel that goes over blockchain and the implications for blockchain in the channel, which providers are using blockchain now, how can we actually engage our customers and help them develop their own blockchain applications as well. And again, that panel is going to happen at Telarus Partner Summit. If you haven't received an invite, you actually probably have. Please check your spam folder. We want to make sure that you click on your specific unique URL invite to come to Partner Summit. If you are a supplier and just haven't signed up for Partner Summit yet, contact our supplier management team. We would be more than happy to accommodate you. So today, we're going to go over the main talking points. 1, cryptocurrency and blockchain. How does it work? Second, we're going to talk about what it is and how it can benefit your business and possibly the business of the clients that you are consulting with. The 4th thing we're going to talk about is, okay, great, how do I get started? And the 5th is, where do you go for additional info in addition to Telarus Partner Summit here in July. So with that, we're going to talk real fast about the differences between cryptocurrency and blockchain. A lot of times in conversations, these two terms get intermixed, and they're actually very different. It's like when you talk about cement and you talk about a house. A house is built on a cement foundation, a cement infrastructure, and the house is kind of what happens when you put all the pieces together after it. That's the very same thing as blockchain and cryptocurrency. Blockchain is the foundational architecture on which cryptocurrency is built. And Josh, I want to bring you in right now and talk a little bit about Vitalik Buterin. He is the 26-year-old founder of the Ethereum network. And explain to us real fast about who this person is and what he did in terms of advancing the blockchain forward.
Yeah, just, all really, really smart people are a little bit crazy. And this guy, by no means, right, fits right into that. Drop out of college, just went through some things and wanted to figure out a way of how can we help the little guy, right? The big guy has a lot of power. The big guy holds the cards. The big guy controls the finances, just that kind of methodology. And this guy was super, super smart, right? When we're out playing tag with friends, he's doing cryptographic mathematics and programming and just figuring out a way to make it better. So obviously, we're going to get into the separation of the blockchain component and how it relates to cryptography, or how it relates to finance. But that's kind of where he started, right? How can I decentralize? How can I standardize something and really get that out there? And so he's been instrumental, I think, in some of the key technology behind launching that, and then now is going forward and launching and helping and donating and doing other cool things. But he's one of the brilliant minds behind it that kind of started it. And you can read that on there, right? Just it sounds like a made up idea, just this magical way that we can have this computer upload programs and run and have it publicly visible and super secure, and give power back to the little guy. And so that's kind of where the idea really started.
That's awesome. And just a quick point of clarification, his last name is Buterin, just because today I'm all about getting last names correct. So just want to give credit where credit's due. And Vitalik created something kind of revolutionary. You talked a little bit about this public ledger, this public way to process a transaction, and how that's different than a SQL database, or it's different than all of the different technologies that exist today. Step us through real fast just the basics of what's a blockchain, how is a blockchain built, and how this whole thing comes to being.
Yeah, think about think about it as a business, right? As we go to collaborate and we share documents and we share and we want to update things real time, a spreadsheet works to a certain point. But at some point,
Right.
that isn't the most ultra real time collaborative. I can't do, tons of transactions in there per second. I can update it. I can send it to you. You can update it. I can watch. But then inevitably we need to go to some sort of database to really exchange and structure a large amount of info at a high frequency, because maybe now I have all this data and all this information and I need applications to access it. I grow and grow and grow. So the idea of a blockchain, if you understand fundamentally what a database is, it's a series of rows and tables and data. And that can be a lot of different things. It can be financial information, it can be health information, it can be anything that you want it to be. It's a Lego
Right.
box. So the fundamental behind blockchain is that it's a database. It's a database that builds and builds and builds. And so I think understanding the biggest question that I hear about it is, well, geez, is that secure? Is that going to get hacked? I think you have to understand the basics of what this is building on. So you've got a series of mathematical equations that are being added together, and you have this output, right? And you have this very unique hash. And so the idea of the blockchain, of the database, is to really store this hash linearly and to store it chronologically. So you're going to hear some things: immutable, irrefutable, all these things of how it can't be changed, because you now are decentralizing where this database is. This database is living on a network of peered devices. So compared to the current financial system where it's stored in the Fed and all the pieces that go along with that when transactions clear, now blockchain itself is this decentralized node where when that transaction happens, or when that ledger happens or gets added to, it's stored across the network. So we have all these devices across the network that have the power to validate a transaction. So a request
And Josh,
for X transaction.
answer me one quick question. Where does this network come from? Did some company buy a bunch of servers and put them out there like Google or Amazon, or like where is this network located?
The net. I feel very.
This is a softball, by the way.
Yeah, no. I feel very future when
And
I say
don't
this.
tell
but
us
the
it's in your basement, because it is in your basement.
Well, some of it, a very, very, very small portion of it is in my basement because I am a nerd. But it's everywhere, right? It's anywhere computing power exists. And certainly you have many people that have invested in this early on that have data centers full of computing power and servers and graphics cards doing transactions, but the network is everywhere. So
but it's a volunteer army, right? These are all volunteers. No one's paying them to do this. They're coming on, they're buying their own hardware. They're basically committing that hardware to the network. They're downloading free software, shareware basically, and tying it to the network. And then they're starting to participate in the rewards the network pays out to these volunteers that volunteer their computing power to the network, correct?
You got it.
That is awesome. So talk to us a little bit about some of the key takeaways of blockchain. If someone was only going to know, 5 key talking points about blockchain, what would they be?
Yeah, so these 5 here I think are critical, right? You think of what we talked about, of how the chain builds and builds and builds and builds over time, and new blocks get added to the chain. Once so much data is filled up, another chain gets added in. But again, you can't go back somewhere in the chain and adjust something, right? Over 51% of the network would have to agree that a change needs to be made, and then a change would be made. But it can't be one person cracks in, a bad actor cracks in and says, let's make a change. No, because you're only making a change at the last piece of that node that's there. So you have this irreversible component because of and again, we're not going to get into the math and the craziness of how cryptographic and hashes and all that stuff work, but it's building its building. So you have this irreversible component of it. You have some anonymity to it as well, because if I want to send Calvin a token, or if I want to send Roman a token, it's give me a really, really long hash address. I don't know that that's Calvin. I don't know who that is necessarily, but we agree on this transaction that needs to happen. The platform, the system, the computers validate that transaction, and then I send whatever I'm going to send, or whatever that may take. The fast and global piece, when we're going to get into this a little bit as it relates to financial, is, currently we can do business from a financial perspective very, very well 8 to 5 with regard to transacting dollars. The idea of this chain and building on this chain and leveraging this technology, it doesn't matter where you are, it doesn't matter when you are. So there's a global component and a timing component that opens up some ways for you to do that as well. And I think we've beat on security a little bit. More to come from that later. But the idea is, because of the way that it's designed, because of the structure of how the chain builds, you've got security built in there for sure. That is the biggest piece about this. And then, permissionless. I don't need to be XYZ authorized user to be able to share and transmit or work with you or talk with you or send you. No, I create those rules, right? I get onto the network.
Yep.
I get an address. I'm verified, all these good things, know the user, and you've got permissionless to it. So
I think most,
remember.
and I think most people in general kind of have a grasp for this. I think the one that sticks out for me is pseudo-anonymous. Like, it's, no one knows it's you, but like when Vitalik gave $1 billion in crypto to the India COVID-19 relief fund 5 days ago, like, people saw that 1 trillion coins was transferred from wallet A to wallet B. And it wasn't really hard to denote, because that wallet is kind of, associated with his name. But the key thing to see is that every transaction is public record, but no one knows who those people in the public record are. And so it's kind of a interesting thing. Talk to us a little bit about, now we kind of understand how the blockchain works. It's this database, it's irreversible, et cetera. Talk to us about some of the possible applications of this technology.
Yeah, so a thought here, and this is what I want everybody to kind of open their minds to as we go through this, is if you think about any great change in technology that's happened in our lifetimes, it's been a slight iteration and an improvement on the way that we have just kind of done things up until that point. And then hindsight's always oh, well, yeah, why didn't we think of that? Or why didn't we do that? That's so dumb. Why didn't I think of that, right? It's very easy in hindsight. Just take the iPhone rollout, for example, right? Steve Jobs comes out and says, geez, I've got this internet device, I've got this communication device, and I've got this messaging device. And people are looking for 3 devices, and poof, it's 1 device. Right? No brainer, right? How could you not think of that before?
Exactly.
But it's it's a slight iteration and an improvement. So these are all the different areas that I think are critical to how we work, how we do business, how we transact. And some of these have very, very old ways that we have done things. Some are slow, some are inefficient, some are insecure. So blockchain, because of how that fundamentally works underneath and behind the scenes, introduces all sorts of ideas. And obviously the one that keeps coming up that I think has the really the first iteration of success is the financing component of it. Think of, could I validate and verify transactions and send money faster? Could I close on a home loan faster, right? Could I exchange stock and all these things faster? So you see that list goes on and on there. But I think today we're going to focus around the topic in everybody's mind, which is the currency, the crypto component of it.
Right. There's some exciting stuff on here, like intellectual property. We've already seen NFTs come up for like the ownership of a piece of art, like voting. We wouldn't have to worry about mail-in ballots. We wouldn't have to worry about absentee voting. It would be like, okay, you go in there, they verify your thumbprint. Oh, that's Josh Lupresto. And then you click a button and you voted. And we know exactly who voted, all of this stuff. And again, it's pseudo-random. So everybody, if we needed to know who did it, we would know. Ownership, title records, healthcare. There's so many really interesting areas. But again, the reason we're here today is to talk about the cryptocurrency element of that. So Josh, thank you so much for breaking down what blockchain is. Now we're going to bring in Roman and Calvin to talk to us a little bit about one practical application of a blockchain is knowing and tagging who owns what token or who owns what piece of monetary value. So tell us a little bit, Roman, real fast, what a cryptocurrency is in general.
Yeah, thanks a lot, Patrick. I guess the cryptocurrency is really the part that's most visible to everyone. And I mean,
yes.
With what just happened in the last couple of days, it was once more very obvious. So cryptocurrency is a use case that runs on the blockchain, right? And it is many of these use cases, you can use them as like any other service, and a currency, this cryptocurrency is how you pay for it. So it's the monetarization of the blockchain to a certain extent. The beauty is it is decentralized, or supposed to be decentralized. So if Elon Musk tweets, that should not have an impact, but we are still in a very early phase when it comes to cryptocurrency.
In theory.
So in theory, yeah. yeah, it's just a very easy way. I mean, you said it in the beginning. So I live in San Francisco, but I'm originally from Switzerland. It's by far the easiest way for me to transfer money from A to B, but from the US back to Switzerland. It's a very easy use case. It's the most dominant use case of a blockchain as of today. But there is a lot of stuff going on and a lot of use cases that are built on top of it. And many like new companies, they use it as venture capital as well, which is another use case. So they use it as like a stock, and you can invest in this company using their cryptocurrency, for example.
Exactly. And cryptocurrencies don't come all in one size or flavor. Calvin, talk to us a little bit about really the four basic classifications of where cryptocurrencies typically fall.
Yeah, sure. Let me clarify a couple things too as I've been listening.
You bet.
First of all, there's not just one blockchain. There's multiple blockchains. There can be public blockchains as well as private blockchains. So when it comes into the channel and doing business, imagine a banking client that wants to keep things private, but non-fungible to where ledgers happen. Think about, taxation, having things, documented and recorded one time, never reversible. That's a really important factor that comes to some of these blockchain technologies. And
Yep.
as
Great
Josh
point.
was saying, the use cases are unbelievable. We could talk for probably the rest of the year on the different applications. With regard to cryptocurrencies, it's interesting. A little history to kind of go before Vitalik Buterin. Back in 2018, I think is when Satoshi Nakamoto wrote the white paper and transacted the first Bitcoin. And what a lot of people have heard about is Bitcoin. And from that, it's a proof of work technology, as we've heard about a little bit with some of the questions that are out there. And at the time, it was revolutionary. And with any revolution, like Patrick, you were mentioning, if we just take a step back away from how much money am I going to make to, what are revolutions and why are they out there? So the purpose, the raison d'etre, if you will, of the reason being of cryptocurrency was to take away the centralized control of something so that people could interact. I know, Patrick, we've had some exchanges on the blockchain, and it's pretty exciting to see, the click of a button, and within less than a few minutes, there's a significant sum of, cryptocurrency in one location or another versus, it took me 5 days to get a wire transfer done from my last dollar amount I got into my bank account. And I even had to plead with my bank to tell them why I was doing it. And, it's my money for, what sake. And, it's just very frustrating.
And that's not counting the hold time that they impose on you, even after you receive the money. It's nuts.
Yep. And then imagine that just kind of built on that, ever since we were, trading puka shells on remote islands on the planet in the early, whatever year it might have been before 1500, and on and on and on and on and on. And now we're at a state where, for the first time ever, Africa's like, countries like Africa, people who don't even have an identity or a bank account, but they somehow have a smartphone, and all of a sudden have an application and begin transacting from that format, to where, the huge use case that Cardano specifically is really doing big in Africa is, the idea of micro lending. You have a farmer in a field that needs a little help, but in that current regime, there's no way to really get any help. And they're really kind of cast down to the lowest parts of society from an economic perspective. So the idea to make that, instill that into what's happening is huge. And if you think of that use case all the way to, United States government, the dollar as the gold standard out there in the world, because we primarily give a lot of money to a lot of these other countries. And then you insert the concept of inflation. We'll talk later, I hope, about the kind of the perfect storm we're in and why things are going so crazy and why it's a time that people ought to pay attention. So back to script here. And I'll take a little help from Roman, from you a little bit on the utility token a little bit, but the idea of store of value, Bitcoin, one of the original coins, you've probably heard in the industry, especially this past bull run, this past year, there's been a lot of momentum from institutional investors, a lot of Wall Street guys, Michael Saylor, I think you have a note at the end of the presentation from MicroStrategy, has made the bold move and put his entire corporate treasury. Stop for a second, just think what I'm saying. Took your corporate treasury, so you're this multi-billion-dollar company, publicly traded, went through all the hoops to get it done, and now they move money out of banks to live in BTC Bitcoin because they feel that the smarter hedge for this inflationary time, printing of money, all those other things are out there. And some of the early adopters in that have seen their balance sheets be more impactful because of the gains in crypto than their own, EBITDA of their normal business function. So the storing of value in crypto allows the cryptocurrency market to adjust value. Value is really the definition of how much someone's willing to pay for something, right? And what we're laying on top of that is what we've all looked at in our technology industries. I mean, I went to Illinois. I was frustrated that I didn't hop into the supercomputing lab where Mark Andreessen, who created Netscape, was. So I was like, oh man, I missed that. Meanwhile, I was designing web pages and created a small web and app dev company. But now we're at the front end of something from, a revolutionary standpoint, in my opinion, that dwarfs everything that we've known prior, because we're talking about the one thing, the one intersection of thing that people have cared about since the beginning of time, and that is value, the store of value, money. So the idea here of Bitcoin being more stable, though we've seen, contrary market conditions in the last week specifically, and we'll talk about the volatility of cryptocurrency, I hope, as well. But the idea that you could store your fiat money value, your dollar, move it out of that denomination and into a cryptocurrency such as Bitcoin, Ethereum, or hopefully one of the top 5 would be my opinion to most people to think about it that way. And then we can even talk further about the different ecosystems and why those things are there. So to that point, it becomes a digital currency for trade. I could have someone buy my truck in my driveway and, send me from their phone whatever dollars for the value of my truck. At the push of a button, it would show up on my phone and I could give them the key and sign the title. It could be that simple for the transaction of that. Real estate's becoming a big thing. The idea here that we're all familiar with Venmo and PayPal and all of that, but there's also 3% fees that comes with a lot of that. In this case, there's no fees for me to send money from A to B, other than depending on the denomination I'm sending, there might be small network fees. And you've heard a lot about Ethereum having large gas fees, which I'm sure Roman will hit that on the head eventually. So Roman, do you want to talk a little bit about utility and security tokens?
Sure, yeah. I guess one thing I would like to add, and probably that's sometimes forgotten. You mentioned Venmo. Like Venmo is an awesome application here in the US to share money with someone else or to send money to someone else. But we have to keep in mind it's only available here in the US, and not even every bank accepts it. So this is a huge use case, right? Like crypto has no country, it has no borders, nothing.
Right.
So very powerful. When Vitalik Buterin wrote the paper on Ethereum, what he did is he looked at the concept of blockchain that was introduced earlier, and then he said, hey, there's a use case that we can introduce here, which is smart contracts. So you can use the blockchain to store smart contracts or information on the blockchain. You cannot just use it as a token like Bitcoin. And don't get me wrong, but Bitcoin is rather useless in air quotes, because it's just a coin, a store of
It's like a bar of gold. Like you don't walk into a store and give them a gold coin to buy groceries, right? It's an investment that you have that will store value.
Yeah.
And just getting back to the presentation real fast, utility token, which you're talking about, is store of information, not necessarily the store of a piece of digital asset. Digital currency, you have cryptos that mirror fiat currency, right? A US dollar coin is always $1. A digital yuan in China always mirrors the value. So it's basically an electronic way through the blockchain to exchange currency where governments set the value, whereas utility tokens and things like Bitcoin are kind of the users kind of set the value based on utilization and supply and demand. And so there's different flavors, and those flavors break down, and I think this is where you were going, Roman, on different things called proof of work and proof of stake. And this is something that a lot of people haven't really got their minds around. But I think this slide, pretty tactfully illustrates the difference between proof of work, which is really computational power, and the ability to mine and solve cryptographic puzzles with CPU and RAM and electricity, quite frankly, versus proof of stake, which is when you actually own a coin, and the owners of the coins are the ones that are voting on changes in the blockchain and everything else. And one is incredibly powerful. One is incredibly power efficient. And this is kind of the genesis of Elon Musk's tweet just a couple days ago, where he said, hey, Bitcoin isn't eco-friendly. But then again, it wasn't built to transact. It wasn't built to go to the store and buy a loaf of bread, right? It wasn't built, quite frankly, to buy a Tesla with it. There's other things that are way more efficient that can function in that role. And so I think it's important that people understand not only that there are different types of cryptocurrency, but there are different architectures on which those are built. And so this is a little bit about proof of work. And when I think of work, I think of like that graphic. I think of the miner in there like slaving away, burning calories. And proof of stake, I'm thinking of people who own stuff that are taking their coins and staking them, taking those coins and putting those coins to work so that they can vote on the next blocks. So how do you think of proof of work versus proof of stake, and why is this a big deal to understand if you're going to get into cryptocurrency?
Yeah, there are actually a few questions from the audience about this topic, and yes, it is absolutely central to blockchain or to cryptocurrency. I'm not sure if I have to add a lot here, because you mentioned the important points, but easy one is Bitcoin is proof of work. So you basically have to find by luck the next hash value of the next block. So it's you burn like computer
just brute
power,
force, man.
Yes, it's brute force, yeah. And if you're lucky, you hit the number. The more computer power, obviously, you have, the better. But it's not efficient. But we have to keep in mind, this was the first blockchain that was developed was proof of work, right? And since then, a lot happened. And proof of stake is what's better. So Ethereum is still a proof of work, but it moves to proof of stake later this year in the version 2.0. But then Cardano is, for example, a blockchain, also a fundamental blockchain where you can build on top of it, which is a proof of stake. So I, for example, all the Cardano ADA coins that I have, I stake them and I actually earn interest, because when I stake them, they are taken out of circulation for that time where they're staked. That stabilizes the price, which is a nice side effect. But at the same time, I earn interest because I contribute my ADA towards the proof of stake algorithm that runs the Cardano blockchain. We have USD, that's one of the stable coins. So it's pegged to the US dollar. And then we have other,
and also pays interest, and it pays interest better than a savings account.
Yeah. So there's almost everything in crypto at the moment pays better interest than what you can get from a bank.
And so I think it's important that people, when they hear the term cryptocurrency, it's like hearing the term stock market. I mean, you have stocks that represent companies that haul freight. You have stock in companies that build computers. You have stock in companies that offer cloud computing. You have stock in companies that offer cloud-based CRM applications. Those companies are vastly different, but if you log into your E-Trade account and type in the ticker and hit buy, it feels like they're kind of the same. Same thing with cryptocurrencies. Like Cardano and Chainlink do vastly different things. And in fact, here's the one interesting thing about cryptocurrencies is sometimes you have something like a Chainlink being built on top of an Ethereum, right? And so you have cryptocurrencies built on the back of other blockchains. And so it's pretty interesting. And when you invest in cryptocurrencies, and correct me if I'm wrong, Roman, you're counting on a few things to happen. You're counting on, number one, the utilization of that blockchain to increase. The more people that use it, the more companies that develop applications on it, the more those tokens are going to be in demand, which means the prices are going to go up, which again, the whole reason for that supply and demand is to attract more nodes, and attract more Josh Luprestos to go out and buy more hardware to commit to the network, right? Because now it's like, hey, the miners are a fickle bunch. You know, it's kind of like agents in a lot of ways. They kind of look and see what's out there now and what's paying now, and that's where they're going to head off and point their computing power. And
yeah,
so
it's all about the utility, right? I mean, if you I'm pretty sure it's going to be hard to build another Bitcoin because we already have it. There are more efficient ones. Litecoin is also proof of work, and it's a good one. But if you build utility for your token, if you can actually do something with it, that increases the value. And for all the people that are new to it, I mean, I used a lot of the time during the pandemic to learn about it because I had time to waste. So I knew about it before, but that's when we got me really back into it. So you have a lot of use cases, and you can hatch. So to get back to the slide, you can hatch against inflation. So I'm Swiss. I currently earn dollars, and there is a lot of inflation with the US dollar. So a hedge for me to not lose against the Swiss franc is to invest in crypto and hope that it goes up, which it will, like it always.
The European Central Bank, the Swiss Central Bank, the Fed, as they make decisions to print more money to pay all these bills, it is a great way to hedge. And it's also, people ask me, well, how do you know which cryptos to kind of look at? I look at venture funding, right? Because where money is going to these smaller startup companies, I look and see which blockchains they're selecting. A lot of times they put this out in press releases, like, hey, we've selected the Cardano blockchain to build our new DeFi application. And so you can almost see there's like a paper trail of where the money is headed. And it's basically like investing in a .com company like Amazon, really before it's Amazon, because you can see that that's where all the R&D money is going. And it's not really, I mean, a lot of people say, investing in cryptos is like rolling the dice. It's like a casino. Honestly, it's not, because if you see where that venture funding is going, that implies greater adoption of that blockchain technology, which means it's going to be in higher demand in the future. And so an investment in crypto is really, you're becoming a small little tiny shareholder, whether you own the token or you actually pledge your computing power into the network. You become a part shareholder, in essence, of the gains that blockchain makes.
Yeah, and we should preface too. I mean, we gave the preface earlier, right? Do your research, do your homework. Yep. With all the good that comes with this and the goodness that comes with this, right? I put the Doge up there for a reason, right? To get a rise out of people that are focused on this, because there are coins and there are cryptos that make sense, that have an algorithm, that have a reason, that have a purpose, smart contracts, all these things, and have a limited supply of circulation that do have there's value in future. And then you have meme stocks, and you have all these things that happened, right? We all saw the run up. We saw the GameStop thing happen, where things that shouldn't have had as much value grew and skyrocketed in value because people willed it to be so. And I think you have to be really careful too, as you look at crypto and you do your research and do your homework of really what is behind the scenes, because while one may have a reason and one may not, all of a sudden, because a certain celebrity or certain things happen to pump up a certain one, those can grow, and as quick as they can grow, they can fall. So always just your homework, be careful into what you're going into, just like anything else.
Yeah, and Josh, to your point, doing the homework really, there's a lot of YouTube channels out there that are absolutely amazing that follow crypto. Another thing that people can do to get started is just open up their own little wallet and just start trying it out with a couple $100 and seeing how it works. I mean, whenever a new crypto or a new currency comes out, I'll go and I'll put $50 on it just to kind of see what it's like. I'll read the white paper and just to get myself familiarized with it. Stable coins are interesting because you could literally hold dollars and just hold your dollars in your crypto wallet and just earn interest, as opposed to holding dollars in your savings account and earning no interest. Some things banks can start to do, or banks or your customers, hey, maybe they want to get into this. Maybe they start accepting cryptocurrency. Every crypto wallet has a little QR code that someone can scan and hit send, very similar to Venmo or anything else. They can offer to pay in cryptocurrency, and Telarus is doing some R&D in this area as well. And last but not least, Calvin alluded to this. Some people out there are converting, like Michael Saylor in MicroStrategy. They're converting their balance sheets and actually storing them in Bitcoin and other altcoins to hedge against inflation. So their dollars aren't just sitting there, really literally doing no work, sitting on the balance sheet. And so again, there's got to be somewhat of an appetite for, I wouldn't say uncertainty, but volatility. We've seen last week that things could be super volatile. Again, the thing that gets me over those emotions and feelings of fear is just the fact that if I was to fast forward into the future, and 5 years from now, Patrick from 2026, comes back, and says, "Hey, Patrick, 2021, this is a technology that's going to grow." I mean, it's akin to hosted VoIP, it's akin to AWS, all of these things that we deal with now, but on steroids. Like Calvin said, there's one thing that's fundamental to the human experience, and that is the exchange of value, whether it's some type of currency that we can use to trade goods and services. And so with that, there's lots of exchanges that are out there that you can buy. There's Coinbase, Buybox, Bitmart, Kraken, a whole bunch of them. We've set up a special URL, so if you're interested, if you go to coinbase.telarus.com, it'll redirect you to a page where you can get 10 free dollars just to get started off. And if you're interested in learning more, coincidence would have it that Michael Saylor, who we've kind of referred to a couple of times in this presentation, in 4 days, he's actually the keynote speaker at Consensus. CoinDesk is a major cryptocurrency RAG, kind of like Channel Partners is to us. Consensus or CoinDesk is to the cryptocurrency industry, and Michael will be speaking. I think it's like $100, a couple $100. Hey, if you want to attend that for free, cash in your Telarus loyalty points. We're happy to exchange those and get you a free ticket to go hear Michael Saylor speak in the virtual conference. Again, like I alluded to, Telarus Partner Summit coming up in July is really one of the places that we'll be able to sink our teeth into some of these use cases that Roman and Josh and Calvin referred to in this presentation. So with that, I want to thank our panelists for being here. I want to thank you for being here. I think this is probably the most anticipated part of the entire experience, and that's the Q&A session. So let's go ahead and kick it off here. Anyone have any questions they want to go ahead and type in fresh into the chat, and we'll get going.
There are already quite a few, actually.
So the Telarus,
there's a lot of questions.
Okay,
yeah.
So let's start with this. The Telarus website, once more, it's coinbase.telarus.com. So you can go and get your setup with Coinbase for 10 free bucks. Next question.
I wrote down a couple of questions. Yeah.
Okay, go ahead, Roman.
And this is probably for if you want to start. So again, I personally got into it during my studies, and that was long ago. And then started to invest in 2017, but like really got back into it in 2019, 2020 then. So I personally recommend YouTube. It sounds silly, but there is a lot of really good content. Because it is some fancy new tech stuff, people use YouTube as a platform. There's a guy, his channel is called Coin Bureau. One is called Journey Crypto. Sheldon Evans is a great guy. So there's a lot of good information on YouTube to learn. So really get into it and watch the beginner's guide. For information, I personally use Twitter because it's not the best medium or social platform, to be honest, but it really helps to understand if there are fluctuation in the market. Twitter will give you the quickest answer to why this is happening. And then Patrick, you mentioned it, that like what you need to start, usually it's a wallet. So you can go to a centralized exchange like Kraken or Coinbase, that's where you can have it. And if you really want to get into it, you can send them to your personal wallet. Now, I personally use MetaMask. That's a browser extension. That's one wallet, an online wallet. And then the other one for offline is called the Nano Ledger that I use. I don't want to make like recommendations on any tools, but it's a hardware wallet. So that's just don't
throw it away, because we don't want to see you rummaging through the trash heap, Roman, looking for your digital.
Yeah, always
USB
keep that in
stick.
mind. This is self-custody, so you're responsible. It's like if you put money on your pillow and you lose the money, it's gone. It's the same with your private key. If you lose it, it's gone.
So that's good that you mentioned that, because we just want to touch on a question about government regulation here for a quick second. How do governments regulate something they don't control? And the answer to that, and you guys can add some background too, is they control the companies that own the wallets that are public wallets, like Coinbase. So when Coinbase wants to get listed on the NASDAQ, which they just did last month, they have a series of questions that they have to go through. And one of the questions is, will you report these transactions to the IRS and to the government? And they have to say yes. They have to be willing participants and be able to report the different transactions, just like your Merrill Lynch account or your E-Trade account. I mean, just like any bank account reports to the IRS the interest that you made on your gains. Very similar. So governments don't directly regulate a cryptocurrency, but they do regulate the wallets that hold the cryptocurrency for its people, called the custodian. So the Krakens of the world and the Binance and they're the ones that get regulated by the governments, or else this whole industry would have to be governed by people holding their own wallets on their own thumb drives. And so for me, all of my assets are inside a myriad of these different online platforms, and I know that these online platforms cooperate with the United States government. One of the great examples to that is when the United States government, the SEC, actually filed suit against Ripple Labs, and not against Ripple the crypto. They filed it against Ripple Labs, the company who is doing all the R&D behind the Ripple token. And they basically said, hey, you guys are reserving too many tokens, you're using them and paying bills with them, and those people are immediately getting those tokens and liquidating them. So basically you're putting the people buying Ripple on the open market at a disadvantage because you guys own billions of coins that you're not disclosing. And so the SEC chose to get involved there. And Coinbase, as part of their process of getting listed on the NASDAQ, had to basically suspend trading of XRP. And so that's how the government got into XRP. But if you live in Europe, if you live in Asia, you can still trade Ripple. And again, so each country, like India, for example, they're cracking down on the wallets. They want to know who owns it, are they Indian residents, et cetera, so they can, again, tighten the screws. But to the actual technology and the blockchain itself, the governments can't touch it. Calvin, what's your take on that?
Yeah, so back to the revolution, right? And think, we're in such modern times where revolution to us is really more, how does a company battle it against another company? But if you think of the larger aspect of revolution is, there's going to be a fight, and no one goes down with just to say, sure, run over and take all my property, all my land. So the volatility that we're experiencing in the industry is, one, because we're at the front end. There's a lot of questions about government regulation. The short answer is that's a good thing, not a bad thing, because the crypto industry is in a Wild West mentality right now where, there's some element of governance and some element of crowd control, if you will, based upon supply and demand and market, heuristics, if you will. But as part of that revolution, you're talking, China with the digital yuan rumored a few days ago, which helped trigger the Armageddon sell-off. That they were going to ban cryptocurrencies, like you said, Patrick. India banning cryptocurrencies. If I flip to the back of the book and I look at the answer, cryptocurrency is going to win, and the government.
Yeah, they're not. In full disclosure, the governments aren't turning the cryptocurrencies off. What they're doing is they're passing laws banning their citizens from owning them.
Correct.
And the way they can tell if their citizens own them or not is they can go and issue subpoenas to these wallet companies that operate within their borders, and say, hey, I want to know every Indian citizen, I want to know every Chinese citizen that has assets with you, and I want those reported to us. And so that's really where they stick in. Another question too is, what's the tax treatment on cryptocurrency? And to my knowledge, and to what I've basically understood, is it's much like a stock. So even if you exchange Ethereum for Cardano, right, there's this middle point where you've sold your Ethereum, so that goes as a sale against your Ethereum, and then you've purchased Cardano. So a lot of people have this notion they can just ping pong back and forth, and that it's like no big deal, the government won't know. But every time they do that, there's this buy sell order that takes place that actually does convert it to dollars, that displays within the reports that you can export from your wallet. And that's what you have to do. It's still a very self-reported type of a thing. The government can't come in and see all of your different transactions. The things that are two different things in tax land is, number one, ordinary income, like on stuff like interest, and then capital gains on stuff that you buy at point A and sell at point B, and you have to report that gain that's taxed at between 25 to 35% depending on your tax bracket. And so that's kind of the different thing. To my knowledge, Coinbase isn't issuing those different statements to you. They sent an email out saying, guys, remember your taxes. here's how you do it. And they give you all the reports, but I'm not aware that they're sending information to the IRS just yet. Maybe they are, I could be wrong, but to everybody doing this, it's upon you to make sure you download those reports, take them to your accountant, and account for those on your taxes. Because the last thing you want is, to be the last 5 years get audited and you owe a bunch of money.
Yeah, and Patrick, to your point, as the industry matures and you've seen a lot of movement, Grayscale is one of the major Wall Street ETF funds that are being put together.
Yes.
As more of these mutual fund ETF type things start to get created, the idea is you could have your cryptocurrency investment in that fund, and what happens inside of the
indirectly investing. Yep.
Exactly. And that way you can get in and out of things that you want to without the necessarily short-term cap gains hit. And then there's of course rumor that short terms may go away, or long term may go away altogether, and we're just going to pay full on 43%. I live in the state of Colorado, so we all know how things that once were illegal became legal, and they tax the heck out of it. That's probably more
Is it
my
430 yet?
Than anything.
Yeah, and it's also interesting the different countries and how the different countries, some of them are very crypto bullish and some of them are very crypto bearish, with China and probably India being the most bearish. But one of the most bullish is just to our north in Canada. They already have ETFs that you can go and buy on the open stock market that track the price of Ethereum and Bitcoin. And so it's interesting to see which countries are embracing it and using it to their advantage. Because my personal opinion is the countries that really get behind this technology and help embrace it / regulate it, but do it in a responsible way. I think those countries are going to experience some very robust appreciation in not only their value and everything. And here's the other thing too, just reading more about India and why India wants to ban it. India basically wants to protect its own currency. And like you said, Calvin, with revolutions, there's people that are going to want to protect their stuff. And they're fearful that people will transact in cryptocurrency and they won't use the rupee anymore. And not understanding that tokens are really, they're gatekeepers to these networks. If you want to use these networks, you got to pay tokens to use the networks. And you can go peer-to-peer and exchange the tokens, but I don't think it'll ever take the place. I think it'll be a great transfer of value, but at some point, you got to take your rupees and buy the crypto, and then you get the crypto, and then you exchange it into the rupees. Like they're still the main fiat currencies still are going to exist. This is just creating additional options for people to transact and create value. And I loved, Roman, your example. And can you go into a little more detail about the things you're talking about in Africa and how, or Calvin, I don't know if that was you, but the different use cases of how you don't even need a bank account, literally. If you have a phone and you can download an app, now you can hold crypto, and now the other half of the world that never had a bank account can now transact and be part of the global economy.
Yeah, you've heard about leapfrogging technologies, us in the UCAS space and the circuit space. You think of, South America and how they've leapfrogged because of their cellular networks.
Yep.
Same concept with this, really the concept for people to really look into more, and what I think we should share more in San Diego is that the idea of Web 3.0, which is, we've built from Web 1.0 to 2.0 and now 3.0. And the gist of 3.0 is really the decentralization of the internet. And Patrick, I know we've talked late night in some cases about one particular crypto called Internet Computer, right? Where they're going to take and almost do what Amazon, GCP, and Azure have done across compute, storage, and network, decentralized, kind of like what you see in the early Napster days and some of the Tor world. While it might be illegal, I'm not talking about the illegality of it, but just the breaking up of bits, so that you could store, data that's encrypted in flight and at rest in break it up into multiple pieces in multiple locations, and then bring it all together for that compute instance that needs to happen. This is where it's so exciting for the channel. And I think it's going to be so exciting in San Diego to talk about some of the tangible things. I know I have a few companies I'm working with.
Yeah, I was going to say, can you give us a quick example of how some of this knowledge of blockchain and cryptocurrencies has helped you with your column, Telarus clients?
So the first part that really happens is, I've been consulting in a realm of the channel since 2008. And the word that's coming into mainstream in the last couple years is that idea of the trusted advisor. And that's kind of been the way I've, paid my bills over all these years. And the idea of a trusted advisor isn't, am I good at, global networks? Am I good at SD-WAN? Am I good at UC? Am I good at security? Everyone's talking about the advanced technologies. How can I get my mind around it? it's really about relationships and how can you be the trusted advisor to an individual who has decision-making power at a specific company. And I can't tell you the number of calls. I know, Roman, you've had, all of us have had calls from friends, and several of my friends are getting gray like I am now, and they're in the C-level positions at companies. And I've had a couple that, need UC type opportunities, but they called me because they're like, hey, Calvin, I know you're always pinging me, telling me you got to look at ADA and Cardano and Ripple and some of these other cryptos. That's for you, Brandon, at Evoke. But the point about that is, they don't know what to do. I have CFOs of companies that understand soundly finance totally, but they're afraid to take the step. And no matter what you tell someone, it's an evolutionary process. And the gist of your question, to answer that, and I just want to say one more thing, is that people turn to you when you have knowledge, domain knowledge in areas in our world, because of the amazingness of how the channel's so much more than a circuit, and it's really anything IT. The answer is yes. What's the question? IT related. We have one phone call away from, multiple different revenue opportunities for ourselves, and more importantly, to make a difference in our clients' digital transformation journey. The one step away comment that I want to make is, a lot of us are here, start off our journey in cryptocurrency because we have FOMO, fear of missing out, of making all this money that our friends are. And I tell you, I feel very strongly that if this is the trajectory of the haves and have-nots, lower income all the way up to billionaires, there's going to be a chasm that's created with cryptocurrency. And the people over here won't necessarily know what they're missing out on, but the people over here will have a much easier maneuverability across economics on the planet. And it'll be a whole different reality, and there will be a gap, and it'll create a lot of other problems, which...
And Calvin, in your opinion, is it too late to get in? Are there still good deals to be had? I mean, in days like yesterday, like I spent a good couple hours researching some of those deals and taking advantage of the cheap prices. I think there's some tremendous technologies that people get emotional. They get emotional on the down, but they also get emotional on the up. I mean, that's really the thing. If you want to get in this business, you can't get overly depressed when things go down. In fact, you should probably see it as a way to leverage down if you believe in the technology. But also when things go up, you can't be like, going out spending money thinking you're rich, because I mean, as soon as you trigger the sell button, the government's going to take their 30% capital gains. And so a lot of those gains are illiquid, right? So
let me give you a 30-second answer to that. First of all, I thought my wife would be like, no way we're going to get into crypto. She quickly read, and now she's mad if I leave money in the bank account and it's not in the crypto markets. But then in the last few days, she's very frustrated and upset that I didn't sell at the absolute bottom and buy at the absolute, or didn't sell at the absolute top and buy at the absolute bottom. So it cuts both ways, right? No, it's not too late, but the journey is the first step, and this is what I like to tell people in terms of advice. For me, it's my Vegas mindset. When I was a bachelor, if I'd fly to Vegas with $2,000 and lose it, that would be terrible. But if I came back with $5,000 or more, it was awesome. So for me, it started off with putting enough in there that it would sting if I lost it. But if I tripled up, it would be a pretty interesting, amazing thing. And what, for me, I don't know about everyone else, it's just my opinion, not investment advice, of course, but I have to pay attention with my wallet. And if I don't have something in, I don't pay attention. To your point of $50, try something out. It's worth seeing what things are going. But then what happens is I spend hours and hours of not wasteful time, Roman, but very valuable time doing my research and homework. And I'm happy to stay on past the hour. There are some things around Bitcoin, Ethereum, and Cardano I would love to share if we have time. Those ecosystems are really important. And there's a lot of knowledge that Roman and Josh and Patrick all have that I think we can share if anyone wants to stay longer.
Yeah, and we're up against the hour, and so if people have to drop, that's great. We'll probably stay here for another 5 minutes and get things wrapped up. But an important thing is in terms of timing. People ask me, is it too late? Has the ship sailed? You got to understand. I mean, Bitcoin has been around since I want to say 2008, 2009, when Satoshi wrote the white paper and started mining his own coins, and the first Bitcoin was sent from computer A to computer B. Then you have things like ICB or ICP, Internet Computer Protocol. That thing's been live for 2 weeks. So just like IPOs and stocks, you have new companies coming online, companies that sit back and, similar to what Vitalik said and did a thought experiment of how could I make this better? what limitations does this network have versus that network? And if I was to create a completely new one, how would I do that? Which is really the thought process that went behind Cardano, which is legitimately Ethereum's biggest competitor. And so you see new things coming online every day. And since it's been live for a couple of weeks, I mean, there's not a lot of other people in the world that own that just yet. And so it's there. I think there's still golden nuggets to be had out there. Like Josh, when you're kind of surveying the world out there, like what are you looking for in terms of where you not only put your investment dollars, but where you put your computing power?
Yeah, I mean, there were a couple really good questions out there, and to the point of, it shouldn't be the power of one person that dictates what happens in this market, but it is early, right? And people get scared, and people aren't sure, is this the bottom? Is this the top? What do I do? Where do I put my money? Should I pull it out? You have to look so much more long-term than that. But in all fairness,
that's a good point.
The amount of computing power, the amount of graphics power that is created or that is required to create the mining that is done is getting really high. So when Elon, for example, tweets out and says, hey, I don't know about this one because it's so graphics and power intensive, I believe more in things that are less power intensive, right? So then you have things like the Chia project that pop up that are a different way to mine, that are much lower power intensive, that harness the power of hard drives and all of these things, and keeping the blockchain local and all kinds of different things. So I think, we are still early. There are things that are going to continue to pop up, right? We saw mining go from GPUs and graphics cards to these specialized ASICs computers to be able to mine, to now we're seeing Chia project leverage the hard drive space to do the algorithm. Tomorrow something might come out that says, geez, I've got this great algorithm and it's based on RAM, right? So everybody's going to go out and buy a bunch of RAM and try to do that, or whatever it may be. So again, it's the research, it's paying attention, it's testing it out a little bit before you really decide, is this the right thing for you, right? And how does it line up with your beliefs? You just have to do the homework, and you have to pay attention. Look, we're all in technology. We love tech. It changes so fast, tech in general. This is no different.
Especially here. This is tech change on steroids, man. So
it's right.
It's important. And a lot of partners have been, just inputting into the text window, like, how does this apply to me? I'm like, it's such a dynamic world, and it can create so many, not only cost efficiencies, but having better data. I know that there's enormous amount of applications in IoT. So edge computing, you're still somewhat transmitting data back to the edge. In IoT, man, the data exists everywhere, and you can make really rapid decisions. There's also IoT going into wireless networks. And just like you bring computing power onto a network to process blockchain transactions, you can bring on antennas and onto a 4G, 5G network, put them on top of your house or whatever property you own, and start earning tokens from that cellular network. And so there's lots of different areas that are going to touch our customers. And I know, Calvin, you've done some work with customers on actually bringing in some DevOps folks to actually help your customers move some of their data. And we talk about private data or private cloud, public cloud. There's some data that should be in blockchain, and it's very, some of your important data that you can never lose, or that you need instant access to. And so there's lots of ramifications. And again, we're still early on in the game. We're probably in the third or fourth inning. There's still a lot of innings left to play until this thing gets mature. But it's going to be an exciting time for the trusted advisor, and especially the digital strategists that get out there, because your customers are going to call you. And that's really the true mark of a great digital advisor, is when your customers are calling you, asking you things that they know that you're probably not the expert in, but man, you've been an expert in so many other things. They want to talk to you about these other things in tech as well. And we, here at Telarus and all of us here on the panel, we just want all of you watching at home to understand that this world is coming our way. We can say it's a scam, and people like, you can do that. You can bury your head in the sand, or you pop your head up and be curious and figure out what exactly this is, what it means to your clients. Again, we're going to dedicate a whole lot more time to get into some of those questions at Partner Summit. And so, out of respect for time, let's take one more question. Roman, do you have any question that you want to answer?
I had one question further up that bugged me for a long time, and I honestly have to say I never researched it, but there was the question regarding quantum computing, and if that will break. And I mean, the thing is that, yes, if we get to the point where quantum computers can in a second reverse engineer the private key, yes, then we have a problem, but we will have a problem with everything else that we currently have. So I'm not sure if there are already solutions to this problem, because I haven't researched it. The question came up. It will be a problem, that's for sure. But so will it be a problem for everything else? And as always in crypto, there will be a solution to it.
Well, that's the thing. It's kind of like having a computer with tons of resources. I've never met a computer that the software didn't take over all the resources it was given. As you see more computing power come online through quantum computing and other new architectures and technology, the code that regulates this, the algorithms that are created, will get more complicated as well and make it even, I think, that much more secure. And I think that's also when you start talking about architectures like proof of stake, like you literally have to own 51% of all the tokens on the entire network in order to jack with it. And so it's much easier for people and bad actors to do their thing by coming through the front door, by just getting your Coinbase password. And that's why you want to make sure you're 2FA protected on your login. That's another thing in these wallets. There's these kitty car things called the vaults. So you just click on create and Coinbase will create a Bitcoin vault for you. What that does, it allows you to put your Bitcoin in a vault. And if you ever want to get your Bitcoin out, there's a 48-hour waiting period. So even if someone gets your password and they steal your cell phone and they get all your biometrics and they say, I want to move that Bitcoin to another wallet, they still have to wait 48 hours to have that move from the vault into the wallet. And again, Coinbase will text you, they'll call you, they'll say, hey, just to make sure you're moving your stuff from your vault to your wallet. So there's lots and lots of protections in there. And like you said, Roman, I think it will continually evolve as situations change in computing power.
Patrick, this brings up a perfect example to the question you asked me earlier. And this is something I'm actually doing with Open Systems. One of our joint customers is looking at ZTNA, the zero trust aspect that sits on top of SASE, and having context-based permissions. In this specific use case, not within crypto, but it's easily applicable back to crypto and blockchain for any corporation that's doing any business that they're doing. And unfortunately, a lot of people feel like those things are, marketing buzzwords, those types of things, and they're really not. There's button-down applications right back to our cybersecurity practices within the channel that are completely pivot statements when you're talking about cryptocurrency to a CFO of an oil and gas company. So that's an example for you.
That's a great point. And then we'll finish on this question. I'll toss it over to you, Calvin, once more. If somebody's a total beginner, what are like the 2 or 3 cryptos that you would advise they start out on, cut their teeth on?
So yeah, I'm going to do the standard answer of you got to do your research. However, there's, in a nutshell, really fast, Bitcoin started in 2008. And if you know anything about software development, you have forks of code, right? So you hear about all these other cryptos that were derivatives of Bitcoin. So they took the open source code and applied their own little sauce on it. And that's where Shiba, Doge, a lot of those are just purely no work mirrors of existing stuff that are now marketed and then buzzed and out there. And that's why a lot of the crypto enthusiasts like Roman will lose his mind over someone who invested in Dogecoin, which I did. I've lost half. But the point is, each one of these have ecosystems for a reason. Vitalik, as well as a guy named Charles and Gavin, there were some founders of Ethereum. And when you put that many smart people in the room, you're going to have things blow up, right? And so Charles left and created Cardano. So Ethereum was a second-gen coin, not built off of a forking of Bitcoin. Ethereum was a completely new code base, as was then Cardano. So those three, I think, to understand the actual ecosystems, Roman has a ton of knowledge. I learn from him on a daily basis. I'm a little older. I'm not in the millennial generation where I have to get onto Telegram and Twitter and contort my body in a funny way to try to get into some of the projects that Roman's getting in on, that he's making 10x, 100x on, by the way. So there's a lot more there. But I'd say look at the top 10. There's stories behind each one of these. XRP, there's loyal.
Now, are you talking about top 10 by market cap, top 10 by volume?
Top 10
traded?
by market cap. Bitcoin, okay. Ethereum, BNB, ADA, Ripple. You got to understand why Doge is good or bad for you. Polkadot is an amazing story behind that. And then there's Uniswap and other things that are out there You also need to kind of think a little more global, where we're regulated in the US in certain ways and we can't get into certain projects. There's interesting workarounds for that as well, that it's just worth, I say DevOps this, if nothing else, open up an account and exchange, just to open it, to go through the know your customer laws, show your driver's license, do all the things you have to do. Because when you want to get in and you don't have those mechanisms set up, it's too late. You're going to stumble, scramble for 5 days, and you're going to miss a window like we just had to what we all call in the industry buy the dip, right? I have a lot of friends that have wanted to get into Cardano specifically, and they're like, oh my God, I could have bought it under $1 the other day for about 5 seconds. And now it's back up over, this morning when I woke up, you find yourself, if you're in crypto, waking up every couple hours throughout the night and checking where things are. But it was over $1.88, and I think it's back down around $1.75 right now. So it's made almost a full recovery. And to me, that's one that Roman and I are very bullish on. I think all of us are. So I'd say do your homework on those 3 ecosystems and start to, this is about diving down the rabbit hole. Right now, you're looking over the edge, wondering what Telarus is talking about and what we're all trying to figure out. And you just want to get in and know where you can make all your money. But it's a rabbit hole, and it's an amazing journey, not one that you're going to go too crazy off the rails. And that's what I would recommend. Do your research, get your DevOps tool chain figured out, open up an exchange. Everyone asks which one. Well, each one has a different crypto that you're interested in. So I'd look and see which one.
Coinbase doesn't have Dogecoin. So if you want Doge, you probably are looking at Kraken or Binance or, some of the
Robinhood. Yeah.
Robinhood, where you don't actually own the coins, you own kind of ownership interest in the coin.
And to the Doge point, I think it's been phenomenal for the crypto industry and a double-edged sword, in that a lot of the people that were doing the GME and the, all the other different meme type trades to try to knock out the bad Wall Street guys that were shorting stocks, which is a great effort. I bought into all 3 of them as well, just to put my alignment behind it. But the key there is, you can download Robinhood, you can open up an account, and you can start making things happen. But now when they're asked, well, why is Doge bad? And now that I'm losing money and I'm not getting my fix of endorphins, that I'm going up 100% in a day, how do I get into these other things? And you'll find quickly with Robinhood, you can't get into some of these other projects. So if nothing else, it's bringing the world.
Kind of dumbed it down. Yeah.
Mm-hmm.
Yep.
Yeah, and it's important also to note that all of these wallets have online apps, so you can transact on your phone, you can get alerts. You don't have to be tied to your computer, just like stocks and everything else. It's very, very similar to stocks. There's one last question, and it was for you, Calvin. It was, what were the 3 ecosystems? One more time.
Yeah, so Bitcoin, which was the first cryptocurrency, and it's a proof of work. Josh won't admit it, but in his basement, he has expensive computers drawing a lot of energy, because the problem with BTC is you have all these people trying to solve one problem to get one reward. That's why the problem with it is huge, while not as big as the world's trying to make it. But in this cancel culture we live in today, it's a tricky wicket. The second one is Ethereum, which is a proof of stake smart contract technology, and it's laden with awesome problems. In my opinion, Vitalik's an awesome programmer. He went and solved a problem, and they got to market quicker with their ERC20 exchange of trades. So there's a whole ecosystem to research on that. And then Cardano, which is taking a lot more time to get it right, in my opinion, and it's why they're winning so hardcore right now. And they've done consensus protocols, they have white papers, research with universities. If you really look into Cardano, I think this community will come out and say, okay, so it's about technology, team, traction. If I make an investment in a company, it's really about the people as well, the team, and that's where it comes. And one last takeaway, if you're angel investors out there and you're writing checks to early stage companies, stop. Insist that they tokenize their businesses so that you can buy those early tokens and not get stepped down by those private equity firms and Series A, B, C rounds of funding.
That's fantastic. And if you want more investing advice, just go ahead and follow along the text chat window here. We got plenty of people shouting out their favorite cryptos, and we look forward to actually hearing from you guys in person at Partner Summit about what your favorite cryptos are, what your experience has been. Again, we're going to reconvene this panel again on July 28th, I believe it is, between the 27th and 30th, down in sunny San Diego. So with that, we're going to go ahead and wrap up today's webinar. We want to thank our panelists, Calvin, Roman, Josh. It's just an absolute pleasure to talk to you guys. I realize how busy you guys are. We really appreciate your time. For those of you interested in sharing this recording and sharing this information with your peers or coworkers, or just maybe people in your family that want to get started on crypto, we will have links available to this on our YouTube channel and also in our podcast channel. So thank you so much for all that you do. Thank you for your partnership in Telarus. We really appreciate you, and we're excited for where this industry is going. We're excited for where our company is going. And more importantly, we're excited for where our partners are going. We think it's going to be a dynamic world out there that we're all going to be tremendously privileged to be a part of. So thank you guys so much. Best of luck to you all. Have a great rest of your day and take care. And again, thanks for joining us. Take care, guys. Bye-bye.
Thanks a lot. Bye, everyone.